Let's go! Today I've got an extremely important video, but perhaps in a bit of a different way than the usual videos. So I think most of you would all agree that it is very important to understand how the assets that you are invested in, how they actually works. So this includes the technical side of things, as well as knowing the factors outside of the asset itself that have the ability to affect the price of your investment. Of course, in the case of Bitcoin, some of those factors include the rate at which it is being adopted, the amount of institutional interest in it, and of course, how it is portrayed in the media. So we've been talking about many of these things before, but today I will be focusing on one specific way that Bitcoin is portrayed in the media and explaining why it could be the key to Bitcoin reaching insane price levels in the future. I am talking about the idea that Bitcoin is the best possible hedge of inflation. A lot of times people hear this and sort of skim over it, but yeah, I guess after all, a lot of Bitcoin investors, they invest in the coin because of things such as the decentralization and the fact that it is not controlled by a central governing body. That's absolutely fine. And some others do not really care to learn about that, and instead they solely invest in Bitcoin because they see the price going up a lot and at a very fast pace. These are not necessarily bad things, but if you truly want to understand why Bitcoin is being projected to reach $100,000, $500,000, and even $1 million, then you must understand what makes Bitcoin a good hedge against inflation and why so many people are seeking it out for that exact reason. So let's begin with the simpler part of this, and that is what actually gives Bitcoin its hedge against inflation characteristics. As you probably know, Bitcoin has a maximum supply of 21 million coins. So far, so good. This is obviously something you probably already know. And this is part of the code behind Bitcoin, and it cannot be changed. It does not matter if a government wants to increase the supply, if huge companies want to, or even the richest people in the world. No one can increase the supply of Bitcoin past 21 million. This sets Bitcoin apart from virtually every other asset in the world. Other store of value assets such as gold, silver, and platinum, sure, they are scarce, but there is not a hard-coded maximum of their supply. There could always be more found through mining, and scientists are already discovering asteroids and planets with exponentially more precious metals than exists on Earth. The technology does not exist yet, but when it does, those supplies in space will destroy the scarcity of those assets. Having a set supply that anyone can verify also sets Bitcoin apart from every national currency on the planet. The printing of the US dollar has been the most publicized recently, but practically every other country's currencies experience supply growth to some extent. This is inevitable with every fiat currency. Aside from simply having a set supply, the rate at which the supply is released into circulation also contributes to Bitcoin's scarcity as well as the strength of its network. New Bitcoin are created through mining. Miners confirm transactions and in doing so earn freshly created Bitcoin and transaction fees as rewards. You already know this. But this is what incentivizes miners to secure the Bitcoin network. And this is important because the thing is, the amount of Bitcoin that miners receive for each block they confirm is cut in half roughly every 4 years in events known as halvings, such as the one that occurred last year in May. Originally, at the time of Bitcoin's creation, each block reward was 50 Bitcoin. Now, after 3 halvings, it is down to 6.25 coins per block. It is predicted that at this rate, it will reach 0 in the year of 2140. This means that as time goes on, less new Bitcoin will be introduced into the market, and people will need to pay enough to convince people who already own it to sell. So all of this means that Bitcoin is very scarce and will remain that way forever. Why does this make a hedge against inflation? Well, to understand that, we first have to understand inflation. Simply put, inflation is the decline in the purchasing power of a given currency over time. This can be caused by the supply of circulating currency increasing or by the amount of reserve assets decreasing. The first case is more common, especially as more and more countries are implementing a form of what everyone calls money printing. Specifically, this has been talked about in the news a lot recently in regard to the US dollar. I will get to that in just a minute because this is actually an essential part of what's going to pump Bitcoin to the moon. Before that, however, we just need one more definition to explain what makes Bitcoin the perfect hedge against inflation, and that is the definition of a hedge. All a hedge really is, regarding to investing, is a position that someone takes to minimize the risk to their capital by price movements in an asset. So, let's explain this. When someone says that they are investing in Bitcoin as a hedge against inflation, it actually means that they are not buying Bitcoin to speculate on potential parabolic movements, but that they are taking a position in it to avoid the losses that they would incur by holding a different asset, such as the US dollar. This is so important to understand because this is not how the majority of retail investors view Bitcoin. Most of us buy Bitcoin primarily because we want to make money. We want to see that number go up. This is because retail investors do not usually have the amounts of cash to need to worry too much about inflation. Institutions such as major corporations, on the other hand, have hundreds of millions to even billions of dollars in cash reserves. When you have that much money, each percent that inflation goes up can mean that they are losing tens of millions of dollars in purchasing power. For perspective, the companies listed in the Nasdaq 100 hold nearly $1 trillion in cash reserves. Some of you may be thinking right now that the whole idea that the US dollar is going to lose a significant amount is just a story that is being spread by the news because it is exciting and people will click on it. Perhaps you think the whole thing is exaggerated. Well, now that we understand why Bitcoin is a hedge against inflation and why this is a vital role for an asset to fulfill in times of serious inflation, I am going to explain the situation that is occurring in the United States that is going to cause the US dollar, which is the second largest currency in the world after the Chinese yen, to undergo more inflation than it has ever experienced before. Just like with everything else so far, there are a couple of things to explain before we get into the core of this. First, we have to start with the United States debt, and there's a lot of it. Right now, it stands at about 23.3 trillion US dollars. As you can see on this chart right here, the debt spiked sharply in 2020. The next chart shows us the US debt as a percentage of the US GDP, which is basically the value of everything produced in a year. As you can see, that percentage has exceeded 100% and is currently slightly below 130. The last time there was a spike like this was after the 2008 financial crisis, and levels never even got close to going back to what they were before. And here's the thing, this is what is expected to occur in the years following 2020 as well. During financial crises such as those in 2008 and now in 2020, the US government takes actions to stimulate the economy. To do this, the government needs money, so they issue debt and sell it to obtain the cash they need. And now, you may ask yourself, if the US is printing money like crazy, who would want to buy this debt? Well, this is where it's getting really interesting, because there are a handful of different entities that buy this debt, and they include foreign investors, US investors, and the Federal Reserve. US investors include banks based in the US, and they are actually required to purchase government debt in the form of treasury bonds to comply with certain regulations. So in other words, they buy it not because they want to, but because they are forced to. Foreign investors, on the other hand, buy US debt willingly, but their holdings have been steadily decreasing since 2008. This means that they are losing faith in it as a safe investment. This leaves the US Federal Reserve as the last buyer. They are not required to buy the government debt, but that has not stopped them. As you can see in this chart, the Fed's reserve has been sharply increasing. The Fed buys other assets as well, but this chart shows that treasury bonds have become the primary focus since the start of 2020. This matters because the Fed is the entity that controls the US dollar monetary supply. So when they buy US debt, they can simply create money out of thin air to purchase it, and they have been doing that a lot. These two charts show the M2 money supply of the US dollar. Funnily enough, it looks like it's going parabolic along with Bitcoin. Is that a coincidence? Definitely not. As the amount of US dollar increases, so does inflation. As inflation increases, people seek ways to protect their cash reserves from it. As they do that, they are finding Bitcoin, the perfect hedge against inflation. In other words, not controlled by any individual or group, a supply that never will increase, the most logical thing to do is to buy as much as you can before everyone else does. This is exactly what we have been seeing with MicroStrategy, Square, Grayscale, and all the other institutional investments going on. And at the rate at which it is happening right now, it's only going to increase as Bitcoin continues to go mainstream. These investors with hundreds of millions of dollars of cash are what is going to propel Bitcoin to insane new heights. So guys, I hope you enjoyed this video. Make sure to subscribe if you did so, and make sure to watch the video popping up in the middle of this video right now. I will see you right there.